At a Senate Banking, Housing, and Urban Affairs Committee hearing today, Fed Chair Jay Powell is questioned by Senator Elizabeth Warren about the current state of the economy and why he sees it slowing down.
What has changed in the last 6 months that has caused the Fed to forecast substantially higher inflation, somewhat higher unemployment, and lower economic growth than you did in December?
So some of it is just taking signal from data reports that we've seen. Some of it is people working in the possible effects in the short term of tariffs. We have no view on the wisdom or the longer term effects of trade policy. It's not our job. And by the way, I should add, our forecasts are generally, and in this case, are very, very similar to what outside forecasts are.
I understand that. I'm just using you as the gold standard here. I know it's consistent. But you mentioned tariffs as one of the things that has changed over the last 6 months. You know, Donald Trump has become president and the economy has headed down. Not only does the Fed data now show slower growth and higher prices this year, it sees slower growth and higher prices over the next 2 years as well. And the Fed sees no longer-term boost to the economy or drop in inflation. In other words, no upside to Trump's chaotic tariff war or his other economic policies.
Senator Warren continues by asking Powell about what is under the hood of his economic forecast.
Chair Powell, I know a lot of different factors influence the trajectory of interest rates. Is one of those factors how quickly the federal debt grows relative to the growth in the economy?
Not directly, no. We don't look at that as a factor that helps us set monetary policy.
So you're not watching the ratio between the amount of the federal debt and the growth in the economy?
No.
How fast the debt is growing and how fast the economy is growing? I think I have quotes from you saying last year, quote, "We don't need to pay the debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt." Are you saying something different from that now?
No. When asked and pressed, I pretty much always say the same thing as my predecessors, which is that we're on an unsustainable path. I would not say, though, that we do. I will say this: we do not look at federal financial policy and deficits as something that affects our month-to-month monetary policy decisions.
For more Congress clips, stay right here, and thanks for watching.